What's up? What's up? What's up? How we doing? Hope everyone's good. Nice little push up this morning on Euro. We were recording this yesterday, running these highs. We also were calling this yesterday, longing from here. Beautiful move. Unfortunately, I did have an order set. Here. I had an order set like so. But I didn't tag. So, is what it is. On to the next one. I hope everyone's good. It was a super clean move from gold. It was literally what we were calling yesterday. The only difference is that we didn't get that tap in the respond back to the area, which is fine. You know, it doesn't always have to run back. Let's go to the daily here on GJ. What's happening, Andre? You well? As soon as I get live, I got a phone call. 1 second. Alright, what's going on, guys? Apologies. I got on live and I got a phone call literally instantaneously. So UJ dropped down to the low. We now have a potential for longs out of here. Now, this is the 15-minute chart, so you can run off the 15-minute, or you can wait for the order flow to shift on the hourly. So this is a visual representation of the idea you can use. We can wait for the hourly to shift as well, and then you're going to have pretty much a uniform movement across the whole thing. This is the principle that you can use. You can use a sweep of an hourly point, so like an hourly 4 hour or 1 hour, whatever you want, and then apply it to the 15-minute, or you can wait for the shift to occur on the hourly time frame and then track the 15-minute lower time frame movements, which is obviously going to be the preferred way to do it. It's just going to take longer. What's going on, Shotmaster? Okay, so you saying, I have a question around the Keep It Simple series. Does the size of the FEG matter? Is the smaller one less worth or even negligible? Negligible? Yeah. It's very, very tiny. So the uniform thing I always do is, if the FEG is tiny, like if it's tiny, so let's find an example of this. So like here, for example, tiny little gap. What I'll normally do is go to broker data. So whether you're using a private account or you're using a funded account, whatever you may be using, go to that and have a look and see if it aligns. If it's exactly the same, then generally you're just going to listen to it the same way you would a sort of larger FEG. Nice. How you finding it? Hope it's going well. So it's always going to be a case of, is there the money in, money out system? Because really, the FEG size is only going to be, I would say, only going to really matter if it's only showing a very, very small amount on one, and then it's not showing much on the other. So, for example, let's say we don't have this gap. So let me get my pen. Once this decides to load, right here. Let's get this out of the way. So if we don't have this gap, let's say, on our broker, and we have it on here, we just disregard that gap. So we want uniformity across. So if you have a small gap on here and a small gap on your broker side, just listen to it the same as you would any other gap. You're generally going to see, like here, for example, this gap's tiny. Price still taps in and goes long from there. So it's really going to be a case of, as long as we have uniformity across our data streams, then it will be valid. Hopefully that helps. So we're going to wait for this to open up, hopefully a gap here. If it pulls back down to that 15-minute area, you can always confirm with a new space opening up again, or you can wait for the higher time frame. How are you finding the system so far, by the way? Hopefully good. Okay, so same thing here. If this space stays open, then there's potential for downside from here, and then you'd look to aim towards the lows like this. You can either use the area or the actual structure itself. Look to aim towards the lows, like so. Remember, we have to confirm that yet, so we still got like another 9 minutes left on that. So until we have something confirmed, just sit back and let it do its thing. GU's the same. We came up into those areas that we spoke about yesterday. Sweeping. Okay, but we've seen nothing here, so we take that off. Nothing here, so we take that off. So we've got this, right? So if we don't react here, then we just expect price to keep going up. That's fine. Even though we're expecting it to go bearish, so don't just expect it to completely run bullish, but just look at it to pull back more, right? It's working out quite well. Good. At least till now, the system seems better on higher time frames compared to lower ones. Yeah, so it's always going to be, excuse me, more consistent on the like intermediate time frame. So, for example, hourly to 15 minutes. So using points of interest on the hourly and then using the reaction on the 15 is always going to play out more consistently than it will on the lower time frames. And the reason for that as well is because on a lower time frame, what you're seeing is the investments. So let's say we have a large investment come in here and price action creates a gap down. What's happening is this investment will be fractally broke up into like different chunks. And those different chunks ultimately can cause lower time frames to give you a smaller space, smaller space, smaller space, when on the 15-minute it will be 1. So, for example, you could have price come back in, create a gap down, and then push back up. Create a gap down, and push back up. Create a gap down. So you've sold here and here and here. But in reality, if you're looking at this space on its own, you'd just be getting in there. Yeah. So when it comes to the smaller time frame, it's always going to be higher risk, higher reward. It's kind of like scalping in general. You know, you'll take 50 trades when on an hourly you'll only take 1. You can just study the fractal nature of price. Yeah, exactly. Yeah, and that's the thing as well. You will see it across every single time frame. This is what I've said before. You know, always if you're going to use lower time frames, then just apply a principle that gives your lower time frames more reference, more relevance, if you will, not more reference, more relevance in terms of, let's say the hourly, you're looking at that, you find an area on the 15-minute, you go down to the 5, you find an area there, you find an area on the 1, and you compile it into something that actually holds more consistency for longer term moves. But it's always going to be completely unique to the individual. So that's something to keep in mind. Honestly, that run was so clean as well. That run was so clean. Taking out the low. Straight away, it blasts up higher. This is what we were calling for yesterday. Remember, we were looking at this low. Do I have the element of reference? Yes, that's it. Good morning, Akram. Good morning, Morel. Welcome, welcome, welcome. Hope we're all good. Again, having a look here. So remember, guys, it's always about the simplicity. It's always about the simplicity. And if there isn't a key point to follow and actually track, then just let it do its thing. I mean, one of the guys that he won the Robbins Cup 3 years in a row, from I think it was 2017 to 2021, or 2020. I can't remember what years exactly. He said the biggest mistake that most people make is overcomplicating their system. So the more points you add, you know, it might seem good and, you know, you can check all the boxes and everything's amazing, but it's always going to be more valuable just to hold less of a compact structured system. So it's always going to be better if you have less elements that make a less structured movement than if you have more elements that make a more structured movement, because the more structure you apply to a system, the more likely it is for one of those structure points not to hold its validity. In other words, meaning if you have to have 10 things pointing up, chances are one of them isn't going to be pointing up, whereas if you have to have 2 things pointing up, chances are that 2 things are going to point up at any given time. And I know people are always going to have the outlook of, oh well, the more the better. That's fine. The more the better, but then the less likely it is that a trade is going to come round more consistently. Okay, so as we stand right here, you can see we had the money out, money in, come down to the 15, money out, money in. We had no money out and then money in again. We only had money out. So this is what I was saying before. If you have that 3-stage system, you have 1 that validates direction, which we know is up, 2 to validate a shift in bearish to bullish institutional movement. And then after this is confirmed, so from here, you'd look for that bearish to bullish shift on a lower time frame. Here it doesn't come. So now we're just back waiting for it to do the same thing again. So instead of us jumping in and being like, it's going to go long, it's going to go long, and get blasted out, you just wait again for it to come back. If it creates a space, then we go down to the lower time frame. If it delivers, then we can trade it with confidence. Rather than jumping in on everything and anything, we're just going to wait for it to actually show itself. Same thing with gold here. The way it's making this gap now. If it continues to drop down like so, and then we see price giving us that space, then use that as reference. You follow that run up. If euro sells off here, then that is peak. If it had opened the space and left the space, that would have been so good. I think the FEG on 1 minute could develop more randomly than the higher time frames. I even applied the system to Bitcoin. It also works out not too bad. Yeah, I mean, at the end of the day, it's going to work across almost every time frame. Even on the 1 minute, you are going to see the principle, but you need to think about it in the way that it's applied. So, for example, here we're using the 15-minute as our entry. Okay, so let's just write this down. So we're using 15-minute as the entry. Okay, 15 equals E. Then we have the 1/4 H as our confirm. And then we have the daily as our bias, right? So if we're applying the same nature of this, if we're using a daily bias, a 1 to 4 hour area of confirmation, and then a 15-minute of entry, we need to apply this in the same element. What we can't do is take these principles and then expect the 1 minute to perform in the same way. Now, I'm not saying this is what you're doing, but the principle is always going to be the same. So if we take the same element here and we use, for example, let's say the 30-minute, or let's say the 15 as our narrative. So let's just go to like GJ. I'm gonna go, actually let's go to a blank chart. GJ. Can we delete this stuff on here? Yep. Okay, just gonna go to a random point here. 15-minute, use this as the narrative. Okay, so we'll just go from here. So we've got 15-minute, and we're going to use 5. So narrative is 15, so we're following up here. 5 is the area we're looking for confirmations, and then 1 is the point we're looking to actually get involved with it. So we've seen the confirmation on the 5, bullish to bearish. Then the 1 minute itself, we can then look for price action to develop into that sort of movement. So from here, you can either do one of two things, which is, again, the same principle. We either wait for this area to be hit and a shift to occur, and then we confirm it and enter on those time frames, or you can just trade it straight off, like I've shown before. Now, in this case, because we're using such low time frames, we need to be aware that the narrative basis can change relatively quickly, and that inconsistencies will arise. So Let's continue playing here. So bearish. Let's see if we get a bullish push. Cool. So now we'd be expecting price to play, because this is large, I'd be going for that sort of area, because we don't want to keep it too tight. That's the basis there. We'd be expecting price to go bullish from here if it wants to deliver. So it went bullish, didn't tap in. That's fine. Same basis is always going to work out. If we're using the fractal element of price and it actually taps in and runs. So that is a perfect example there. Now the reason why I sort of dismissed it a little bit is because this would be our first target. So we're reaching our first target. We don't want to expect this area to hold forever. The longer you go from an area being created and not tapping in, less probable it will go over time. So the principle is always going to be the same. If we have that element, so price is running bullish still, great. Go down to the 5 minute. What do we have now? Well, we have this point as well. What can we establish from here? Okay, so we had that nice tap and run right there. Now we've taken this. Is the 15 minute still valid? Yes, it is. Has the 5 minute given us a bullish shift yet? No, it hasn't. Right, now it has. So go down to the 1 minute. Same principle. Runs bullish straight away. So if you were to apply the same move here, excuse me, if we were using the 5 minute, like I said, the same as I showed you on the hourly to the 15 minute. Earlier I was saying if we have an hourly gap, hourly low like this, you can apply this and just track the 15 minute off of this area. The same thing happens here. If you're using the 5 minute, you can just track the 1 minute off of this and then follow the areas. So if you look at what happened, the bearish move into the bullish move, that's where the tap comes. But like I said before, if you're using this principle, so let me rewind it. If you're using this principle, the preferable thing to do would be apply this space. Okay, apply this, wait for a tap in, and then confirm the direction. So price comes down. Actually, I've highlighted that wrong. Sorry. Should be here. Price comes down. Now we're still waiting for it because at the moment we've got that bearish move out. We're just going to wait for that bullish move to come in. There's the bullish move. So we're confirming. Oh yeah, actually. There we go. We're confirming the narrative time frame or the confirmation time frame as our low here. We're confirming the 15 minute as it's bullish. We're then confirming on the 1 minute that in and out process. So from that point, that's where you would begin to say, because we had an expectation of it running here, that's where you'd begin to say this should run bullish from this point. Now the reason why we didn't do that on the last movement, which was here, was because the 5 minute was already bullish when we had that tap in. So we didn't need to apply the confirmation, whereas at this stage, this is still showing bearish. So notice how we're using 15 minute as our bias. We're using the 5 minute as our confirmation. Then we're using the 1 minute as our entry. But in this case, this is up. This ends up being up, but this was actually down at the time. So all we're going to do is we're going to double up on our entry confirm to cancel out the principle of the confirmation, if you were. So we're just doubling up the probability in terms of that. That's why I said if we come back over to gold, I kind of want to show you another example. I just want to go again and make sure the point is clear, because I'd quite like to see a losing trade, just so I can show you the example of it. The bias is still bullish here on the 15. Let's go back to the 5. We confirm it on the 5. Awesome. The 1 minute gave us the double confirm because that was the entry point. Actually tagged in really nice. I only saw that after the fact because I was waiting for the 5 minute to shift. So same principle here. We're still bullish on the 5, so we don't need to confirm the 5. 15 minutes bullish, we don't need to confirm that. Great, let's go to the 5 minute. Okay, there's no area of interest here, so let's wait for the shift on the 1. Okay, it doesn't come. We know the 15 is still bullish, 5 is definitely still bullish. Right there is an example of somewhere you really wouldn't want to trade from. Now, it's pretty simple, pretty self-explanatory why you wouldn't want to trade from here. Now, I'm not saying that because this price action has come back into here. I'm happy for you guys to see a losing trade, but you're looking to trade from this point. So when we rewind this, and I did state this in yesterday's live stream. If you weren't in yesterday's live stream, you would have heard me say this, that the only time we don't really want to be trading this principle is if your target high is literally at the point of you getting tapped in. So your target high is here. Or if we're going to the 15-minute, we could target this, but it's kind of, you want to be going for newly created highs rather than previously created highs. The reason for that is because this could be part of a larger structural move, which could end up giving you a narrative of sell. Not that we need to pay too much attention to that, but the basis of it is you're following direct trend, not previous structural points. You can reference this on the daily because they have higher time frame principles at play. Now, coming back to the 5-minute or the 1-minute, let's just see what this does. Okay, so it cuts through. Now we're starting to set new target high. Let's go back to the 15. 15-minute is still running the same way. 5-minute, still running the same way. 1-minute. Now we can start to say to ourselves, okay, if we get a shift, we have a target. The target's not great, but we have a target. Again, is this something that we want to get involved in if there's a space that opens up here? This is going to be down to you personally, but I always think if you're reaching out this far towards your target, price pulling back and then going again is pretty much the least likely scenario here. It can happen, but it's not that likely. So in this case, it doesn't even tap in, but it does run to the target and then it's selling off. So notice how, again, down here, we had relatively high targets. We had this as a target, we had this as a target, we had this as a target, and a relatively small point of entry. Come back to this high, we have, yes, a relatively small point of entry, but we have 1, 2 targets that are equally as small in their area. Now, if you did take that, then great, and you followed the narrative, awesome. But it's always going to be down to a discretion in terms of what are you willing to trade. Let's play this forwards again. Is the 15 still in line? Yes. The 5-minute still in line? Yes. 1-minute, what's going on? Nothing. Let's go back to the 5-minute. We can use this as a point of reference. Okay, 15-minute doesn't hold much value. Let's see what happens here on the 1. Okay, so you can do the same thing. You can run off of this if you would like to. But we're sitting right up at this high. So do we want to see price pull back? Yes. Are we biased long? Yes. So are we contradicting ourselves by expecting price to pull back? We are. But at the same time, doesn't mean price won't play off of it and go to your target. But notice what's happening here. Tap in, target, immediately drop down. Similar like this, didn't tap in, but target, target, immediately drop down. So we're losing that momentum to the upside. Instead of creating these nice downwards out money directional movements and then seeing a clear shift up to play higher, we're seeing these little short, choppy, changey sort of moves that we don't really want to trade. Doesn't mean you can't, and this is what I'm saying. This is the principle I'm trying to show you here. It doesn't mean that trading it in a short-term basis like this isn't going to work, but it's always going to carry more inherent risk. And it's always going to carry a slightly less probability. So in this case, we tap in and we go long to target. Awesome. That's great. What happens next? Price still plays around, then we drop through. Now we hit our lower target here. We need to make sure that we look on the 15 and the 5 to make sure that our bias is still playing the same. Now we have a downwards move on the 5-minute. So we're going to have to double confirm this if it gives a lower move. If it gives a higher move, sorry. Okay, so we're still not really seeing anything right now. Right, now we have something to run off of. Great. Are we bullish on the 5 minute yet? No, we're not. So we're looking for that double confirm if we get back into this area. Notice how we have a lot more to play with now. We have a high that we can target. We also have an internal high that we can target for short-term runs. So it gives us a much more vast area for our targets. So our target highs. Price can run into here or drop down, or it can run higher, or it might get partially there. But our area of entry is here. The price is going to come back in, give us a gap, and then we can get involved. So we have a very tight area of getting involved, but we have a vast area to trade within. So it allows us to be a lot more in control of our position rather than having the opposite, where you have a really big area where price could possibly fall into and do whatever it wants to do, and then you have a TP that's like here. You know, you're kind of putting yourself in a compromised position there. So let's just see what it does. If it hits our first target, that's fine. If it expands too high and doesn't really give any structure, then that's not really that good. Okay, that's great. So we're probably still bearish on the 5 minute. I'm going to say we are. Yes, we are. Let's go back to the 1. That's fine. Nothing yet. Let's see if we confirm down here. Okay, now this principle here, you can use. You can still use it, but we'd be looking at a new area, which is here now. So we're going to reconfirm it. Didn't tap in, unfortunately. If it did, you would be looking to enter here to go long, but it didn't tap in, so we're not going to trade that. Surprisingly, it actually gave a really nice move there, but again, same thing. If it doesn't tap in, we don't trade it. Simple as that. And price just tumbles down. That's fine. So we didn't take any positions because this didn't tap in. This tapped in, but that doesn't help us. It's not the same relevance. Here we swept a major low and pushed higher. Here we're just moving with the order flow. Now we're back onto the principle here where the 15 minutes probably going to shift, meaning our bias is going to change. Bias has changed. Awesome. 5 minute, what are we saying? Right now we're bearish. 1 minute, let's see what we have. We're bullish. So we can highlight some points of reference. I don't think we'll get up here, but we'll highlight them anyway. And let's see what price does. Absolutely blasting through. That's fundamental movement. That's fine. So we had no trades there. Cool. And you go back to your bias time frame. So it's always the element of what is price doing in a given environment. And you think all of this was given to us by this tiny amount of price action here. We actually had 2 really nice moves, even in super choppy conditions. Down on the 1 minute, we had this move, and this move that all tapped in to give you that expansive move. Yes, we didn't get any other trades after that, and these moves didn't tap in. If you wanted to trade these, then great. But that's fine. 1 trade out of what? 1 day's trading session. It's like 9 AM. This is midday. Yeah, but we're not just focusing on one pair, are we? So that's the main element here. We want to focus the principle of your perception of the money in, money out concept is always going to be applied across a consistent time frame understanding. Remember, all time frames are is data. So if you're not collecting the full amount of data, you're not collecting the data pool, you're going to have gaps in that data. So it's not going to be very useful. And price actually expanded so bullish here. If we'd have carried on testing, I can almost guarantee the 15 minute is consistently bullish across that. Look at that. 15 minutes, no bearish gaps here. Not a single one until here. So we would have been bullish from this point, we would have been bullish for a whole day. Whole afternoon of bullish price action. I wish we'd carried on testing that now, but it doesn't really matter. You guys can go and test in your own time. So yeah, that's just an example of it. Again, I'm not trying to prove anyone right or wrong, any kind of thing. I'm just giving a very clear understanding of if we're going to adjust to our own time frames and own preferences, we have to carry the context across, because it's kind of like let's say I don't really have anything to compare it to, which is unusual. I normally have something to compare it to, but if you're carrying it across, that's fine. Just make sure you carry across the consistency of understanding with that as well. And this is why this system is being automated into a 100% hands-free trading bot. We're hoping to have the bot available for everyday consumers by December. That is the deadline that we're looking for on this bot. December is the deadline. So if you are interested, we will be sending out a waitlist email. You can join the waitlist if you wish. All you need to do is just fill out the little Google form, so we know that you want to be the first to get the bot. So it's just a case of understanding the principle of time frames and applying it in a consistent manner. But the bot itself will just do it 24 hours a day. That's another thing as well with a bot is, like I showed you there, we were looking at GJ and we had like, what, a full day's price action. We got one trade. Awesome. When you get off the PC and you go to bed, the bot just trades 24/7. So this is another thing that I was saying before. Let's take into consideration Euro, right? We're like, oh, we're back testing Euro. Awesome. In a real world scenario, if you live in the UK, let's say, and you don't have a normal 9 to 5 job, let's say you get on the chart at 9, so you get on here, and you finish trading at like 2. You are literally trading this much of price. That blacked out area is what you trade. Until the next day comes along. And then you get on at 9 and you get off at 2. You're only trading these tiny little windows. Tiny little windows. So you can see that it's like such a vast amount of price that you don't actually trade. This one I believe is even, one's over 9. Oh, that's still 330, so 9 to 2. So yeah, the bot trades the rest of that price action. So if you want to fill out the Google document, you can. That will be up later today. And all the Google document is just we take some basic information from yourself, name, email, and you let us know why you want to be using the bot or why you should be one of the first ones to receive it. There's some of the Discord members, some of the community members, some of the long-standing YouTube members will be receiving the bot completely free. So you can pretty much proof test it, even though we will have backtesting data and proof testing data for it. We're not just going to give out some random ass code. It is going to be pretty impressive. So I'd like to say that you guys will be happy with that when it comes out. Don't you agree with discretionary is most profitable way to trade? Discretionary is the most profitable way to trade. Yes and no. Yes and no. The reason I say that is because one's discretion is based on how they feel on a given day, which means discretion as a point. So let's just say discretion as a whole. The factoring elements of that will change on a daily basis, meaning that it's non-consistent. If discretionary points were consistent, then I would agree 100%. But people have too much of a discretionary mindset on one day and then they're non-discretionary on the other. If they wake up feeling good, they're like, yeah, we're going to hold the trade. It should be fine. And then the next day, they're like, ooh, I don't know, maybe so discretionary can be fine, yes. But I would say it's more down to experience and having a rule set in place than discretion, personally. But I believe there has to be some discretionary factors that you will rely on and actually have in place. So, for example, like I've said, on that backtesting we just done, well, I wouldn't even call it backtesting, on that small example, the forward testing example I just showed you, a discretionary point would be, is there enough room here for me to not liably take this, but is there enough room here for me to take this with as much trust as I would if there was enough room to expand massively to the upside? So it depends what you look at in terms of discretion. But yeah, I think there definitely has to be an element of discretion, Akram, 100%. No doubt about it. So yeah, I agree with you on that matter. Yeah, I think we agree. Yeah. That's something that, it's great. Discretionary trading's great. But and it takes one external factor and it changes a lot. It can change a lot. I mean, I kind of think the only way to have consistent discretionary basis is to have a rule set that allows you to be discretionary in a way. Because then you're only using discretion based on a given amount of factors. Your outside emotional sort of, I would say, behavior, which shouldn't really affect it that much. It can still affect it, but you're kind of refined by those parameters. So this is a good example here of a discretionary point. So almost perfect timing. Discretionary point right here. This is a very small gap, yes. But it also means that our entry area is going to be here, if this gap remains. That means our entry is going to be here, and our stop is preferably going to be here, meaning that we have a relatively large range for our entry, when we don't really want to be applying such a large range to our entry. So when we look at this, and let's just put a mock-up here. Again, this is nothing more than a mock-up. I'm not trying to say... And for anyone that is new to the stream, thank you for joining, firstly. But any markups you see me put are for example purposes only. I will never tell you to buy or sell. I'll tell you there is a probability of price doing something. But I'm never going to give you direct instruction. Exactly the same as in the Discord. I'm never going to give you direct instruction on what to do. But this is a great example of discretionary point. Do we really want to trade this basis with our short term and one longer term target ultimately being here? That's the zone. Well, let's do a refined version of that here. This is our area to target, and this is our area of entry. Ooh. Look at the difference there. The ratio is way off. Price can mess around in here for whatever and then come down, and it's got such a tiny area to hit. That is going to be down to an individual discretion. I personally would not even sniff at that. Not even giving it a slight little sniff. This, on the other hand, could be a little bit more lucrative because we have this area, and then we have that as our area to target. So you can see the way that price could come in, play around in here, but then as soon as it starts expanding down, we've equaled this or times it by 2 immediately. Again, it doesn't mean that you're getting 2%, it doesn't mean that you're getting X amount percent. We use an RR basis. The reason we use RR is because risk levels are set by the individual. So reward means return, or, well, I was going to say return on investment, but that's ROI. Risk to reward. So you can risk 0.1 if you really want to. And if you have an RR of 5, you're going to get a 0.5 return. So it's always based off of an RR basis, not a percentage basis. That's what we'll be looking at if this gap stays open. 4 minutes till this gap is actually formed, so we'll see. We'll see. Remember, guys, if you're not a part of the Discord already, link is down below. Also, don't forget, if you are opening up any private accounts, you can use our partnered broker, which is Ross-rfx. I've got many years of using them, and I can back them in terms of being consistent with withdrawals, and even like, obviously, don't have to confirm they're quick with deposits. Every broker's quick with deposits. But with withdrawals are normally within a day. I would say less than 12 hours, to be honest with you. Even some bigger withdrawals, my biggest withdrawal I made was, I think, done within 6 hours. So can't complain with that, right? You can find a link for them down below as well. If you do make an account, you will get bonuses and extra things thrown in because you're using my link, essentially. If you don't have a private account, or if your private account just isn't up to scratch and maybe you want to change, you want to convert across to a different company with better spreads, better commission pricing, then you can go with Vantage.fx. They are a great broker. Right, I'm going to grab a coffee, guys, and when I come back, this gap, okay, as I was saying that, I looked over at the screen and the gap is already gone. So I'm going to go make a coffee and I'll be back in 2. If there is any questions or anything like that, please do not hesitate to ask. I will see you guys in a minute. Right, we're back. Right, so get rid of this. Okay, so Shopmaster. And your opinion is that everyone has to define themselves according to their risk profile, etc. Where they place stop losses and take profits. So, for example, you like to take more risk, target new highs, not just retest the old ones. Start stop loss abilities. Yes and no. The reason why I say yes and no is because there's always going to be a set narrative. So, for example, the set narrative is always going to be, let's target the high that we're traveling up towards right now. So instead of trying to target previous, you can, but it's not, it's not that it's riskier, it's just less probable. So risk and probability obviously kind of follow the same basis. But the principle is, if you have a less pronounced target, so you're not really going to have the flexibility, if you were, to sort of partial or protect your position, stuff like that, you're inherently taking on more risk by targeting something that doesn't have a longer term probability behind it. So yeah, you are correct in a way. Yeah, I would say that you are 90% correct. The reason I say 90% is because risk profiles should be established outside of the trade idea, if that makes sense. So your targets should establish how much probability a trade holds, but then your risk should be developed by what you're actually willing to take a risk on, if you were. So how much money you're willing to put in front of it. What do you mean by target the high? Shoot through it or test it? Just reach that level. By target the high, I just mean reach that level. So, I mean, let's go to UChef. UChef's a really clean example of this. Down here, we go to the hourly. So we had a clear daily bias here. Daily from here. We had no gaps open bearish. We're only daily bullish. So we have this area on the daily, and then we're targeting the newly formed highs when they develop. Now, on the 1 hour, you can see here that we had, excuse me, we had a bullish push. Then we developed these two highs that we know are high value because they swept previous liquidity and then they drove price down. We then interacted with the two lows that we had in place. Well, 3 lows actually we had in place. And we see an order flow shift from bearish to bullish. So just using the hourly, you can say that you have a refined area of this. Okay, you can of course go down to the lower time frames and refine the entry if you like, but we have a entry area of here, and then we have a target area of here. Now we have targets in this range. So in this case, we can target this high if there's small highs, and this high, right? But the overall outcome is, because we're bullish, any major high that's placed in the current trending situation should be the target that we reach for. Whether price blasts through, whether price taps it, what it does with that level is sort of irrelevant. It's more of a case of if we get there. If we get to that point, your order will be triggered and you'll be out. So whether it decides to expand massively or whether it decides to drop away from there, it doesn't really matter what it decides to do there. So the reason why, if you look at this here, you'd have this as your first target, and then something, let's say this high only went here, you'd have this as your second, and then this is your third, is because then what it allows you to do is capitalize on a move from this area up to here. And then if you secure or take partials, price can go down and you go, oh, well, got out. Or let's just say you go BE for a reason, managing your risk. I can't remember if there is a refinement down here on the 15-minute. So bearish, bearish, bearish. Bearish. So the refinement of this would have been there. It's actually super clean. But look, let's be honest, that's such a tight move. That's why I was saying before with the hourly, it's always nicer. And even here, like you can see that you traded it from here, you would have got taken out there. You got taken out. That is 10 a.m. That's market close, so that's not a surprise. You know, you're holding a position through market close that's that tight, that hasn't been triggered in. What do you expect? But just using the hourly narrative, that's just a daily to hourly principle. That's all that is. Daily to hourly principle. And the same thing applied here. Look at the way that this area, you'd have put an order there, you would have got taken out straight away. So be it, but what are we seeing? Well, we're seeing price action develop a high, then it's not really pulling away from it that far. You have one short-term target which gets hit immediately, then we almost tap into these highs. So it's developing those target highs rather than actually playing into them. So if we saw a bit more of a shift down, then we saw like a push, then we know that we're using this as our area to target, our area for entry, and we have a much vaster area for price to expand into if it wants to. Whereas here, we're using this as a target, or this as an entry, sorry, and this as a target. So it's like equally as small in terms of where we're expecting price to go to and from. We want to have a refined area of entry and an expansive area of targets. And even with that, look, it doesn't mean it's going to work every time. That's not what it means. But what it does mean is that it gives more probability to movements in that direction. This is another example here. Look at this on the hourly, right? This is gold. We had one bullish move here. Price gave a gap, went bearish. We had one bullish move here. Price gave gap, went bearish. No bullish moves, bearish, bearish, bearish. Now we've got bullish coming in. So are we going to play bearish immediately from here and go down? Or are we more likely to push up and then develop a move? To then have a tighter area to look for an entry and a larger area for price to expand into. And again, this is not something that you'll look at a trade and say, this trade's invalid because the target area is too small. It's down to personal discretion, but we really want to see a more favorable trade. If you see a favorable trade and you say, okay, great, that is a really tight area that we're going to enter, and then we've got a really nice area that price action could expand through, everything's pointing up, right? We say, great, everything's positive. That's what we want to see. But instead, what people try to do in trading as a whole is, again, I'm not, this isn't directed to anyone in particular. It's just in general. It's a generalized statement. What people try to do is pick the positives out of something that is overall negative and apply that into a principle and say, okay, this can work. And then they go, oh, wow, it did work. And then what that does is that opens up the mindset of, well, we can take trades that overall are bad, but their outcomes should be good. Instead of just saying, yeah, we'll leave that trade. We'll step away from that for now, and then trade when it's actually favorable. Then you're going to see more of a consistent outcome because your decision making is more consistent. Oh, I just burnt the shit out of my mouth. That was such a mistake. Okay, so remember, guys, if you haven't already, hit that like button. We appreciate it. 6 likes so far. Let's see if we can get a few more likes. Remember, we do also offer a membership here on YouTube, which gives you access to exclusive members-only videos. Very similar to the content that you gain access to via the VIP in the Discord. Excuse me. So 1 hour now on gold. Look at what we've had. We had bearish. We took out a target low. We've now developed bullish. So we've seen money out, money in. Okay. So we either now come down within the hourly and we visit a space and we create a new area and we follow it long out into that narrative, or price action prolongs a downwards move, gives us another money out scenario, and then we wait to confirm it again. But if we're truly going to go bullish, this will not change to bearish. This will be bearish, and then it will change to bullish, and everything will align across the board. We won't need to chase the principles. We will be able to just trade them as they come. So right now we're seeing money out. Low taken out there. If we see a money in here, can look to follow it, but again, look at the targeting. We have one target, one space. You can use that if you like. No reason why you can't use that. You can also do the same thing. There's no reason why you can't add in extra time frames for confirmation. So let's say we do the daily as our daily bias. Okay. And then we have the hourly, like the 4 hour, as our bias for direction. So again, bullish. Then we go to the hourly. Okay, bullish. Then we go 15 minute. Okay, bearish. Then we go 5 minute. Bearish. Then we go 1 minute. Bearish. Wait for all time frames to align and then trade it. There's no reason why you can't do that. The only reason why it's harder to do that is because, like I said at the beginning, the more factors you add in, the more probability there is that one of them will not align with your narrative, making it invalid in terms of a confirmation bias. It's situational bias in itself. Like from here, we're on a 15 minute, we need to wait for this gap to form. Okay, 5 minute, cool. We could form a gap on the 5, form a gap on the 1. 15 minutes still sits on the wrong side of the market. So what do? Do you overrule the mid time frame with the lower time frames? At that point, you're making discretionary decisions based off of something that you don't really know if it's going to ever align. And then you look back at price action. Let's say you take a loss and you see the 15 minute and you go, oh, why don't I just listen to the 15 minute? Again, not saying that that is the case, but that's something, if you're going to adjust things, you need to keep in mind. So welcome everyone to the stream. If you are new, make sure you hit that like button. Of course, hit that subscribe button. The Keep It Simple series is now complete. Part 1 to 5 is out. If you haven't already watched part 1 to 5, I highly recommend it. I know there's some viewers in here right now that have watched it all and that think it's great. So if they think it's great, I'm sure you'll enjoy it too. Same thing with that. If you do go and watch that and enjoy it, share it with a friend. Drop us a little comment on there. Drop us a like. We appreciate it all a million. And like I said, early sign up for the Google, early sign up for the auto trading bot is coming this afternoon, this evening, if you were. So if that's something you're interested in, then make sure you're in the Discord, because I will be dropping the link for the bot sign up right there. And I believe, I have to double check with my co-owner, but I think it's the first 25 people will be offering a discount, and then in front of that we're going to be giving it to, I think, 10 people completely free. We already know who most of those members are, but we will be providing that Again, it's not just a random bot. It's going to be pre-tested. It will have data that comes with it. We're going to test over a decade worth of price action, including coronavirus. And then we're even going to go back even further and go to some of the recessional moves that happened in price. So if you can trade through those automatically, you can trade through pretty much anything. And then all we'll be asking people to do, just either show us their results and show us the profits they're making, or let us know what they think of it. But like I say, we're not going to be releasing anything until we are confident that it will perform. MT5, yes, will be MT5. Yeah, because the coding language on MT5 is better than NT4. So we're going to be going MT5 with that one. But that's the beauty of having any kind of trading account, especially if you're in the UK, for example. You can just convert from MT4 to MT5 pretty easily. There's not really a big issue with that. What's the price? We haven't confirmed the price yet. We haven't confirmed the price yet, but we will be keeping everyone updated, and there will be a introductory offer that we put out. It's not going to be like crazy money though. You know, it's not going to be stupid money. And this is another thing as well, that where we've been working relatively close with large investment firms, we've been working really close with large investment firms. We know the way that big money movers work. We know the way that these institutional investment firms work. Like Nesab, for example. We know the way that they work through the markets and the way they methodically invest in given sectors and at given price points. So we are confident that the system that we're building into an automated system will provide an edge consistently for a longer term movement. Although I'm going to be sure to join the free line. Yeah, for sure. And this is another thing as well. We may, once it's out, even do a couple of giveaways for the bot itself. So, you know, there is no complete sort of shut off, if you were. There's always going to be possibilities of providing the access to it. And the beauty of it as well is that you can learn the system yourself and trade it yourself, but you can't trade all price action, right? So there's always going to be opportunities you can't trade. But it's not going to be one of these. We are going to make a few different versions of it. We're going to make a swing version, scalping version, intraday, all different. And then we will have like an ultimate adjustable bot, which will have settings on it that you can change and apply your own time frames to it. Which obviously will be a little bit more expensive because you're pretty much receiving like, well, a limited amount of bots if you were in one, because the time frame you decide to trade is going to be independent on what factors you fill into that market. So yeah, there is a lot of potential for it, and it's really exciting stuff. We're also going to be running a PSS account through it, and we'll consistently showcase it to you guys when we're up and running with it and how it's going. So yeah, should be good. We're looking for final tweaks at the end of this month, and then testing through into December, and then release within December-January period. That's just a rough time frame. Okay, so what are we seeing right now? UJ didn't even give us a sniff. UChef as well, starting to develop a possible gap here. 15-minute time frame. We shifted bullish here. Let's just go back to here because I want to see if we came to the principle, like I said before, of applying the 5 and 1 minute after. Is there a way we can confirm this straight after? That's a gap. This is also a gap. So now we have the 5 minute, 1 minute, 15 minute. Let's see if we get a shift on the 1. That's a gap, right? No. That's a gap. So now in theory, you see a bullish space. This stays open. If it stays open, it does. So in theory, if you're trading off of that principle, your long would go here, stop would go underneath. Of course, look at the high risk potential here that I'm showing you. The same. Well, actually, I'm saying that's complete bullshit. It's not high risk. It's as high risk as you want to take it, but the probability of the setup is going to be less, making it more risky. And it runs target straight away, so it doesn't give you the entry anyway. And you wouldn't be looking to trade that anymore, but the principle remains. So that's the example I showed you guys earlier. Instead of relying on higher time frame confluences, you can rely on a compounded version. Okay, the time is 12:55. Holy guacamole, it's 1 p.m. already. So welcome everybody that's joined the Discord today. Welcome you all. Remember, like I said, guys, if you want to join the waitlist and have your name down or anyone else, the alert for the free entry for the bot will be coming very soon. And if you're not selected to be part of the free version of the bot, you will be given a discount for being on the early birds list. If you want to find that form, then head over to the Discord and we'll be releasing it later on this afternoon. Link is in the description, by the way. Okay, so right now, UJ, let's see again. Let's just go down. I'll show you the same principle here. From this point, do we have a confirmation of bullishness on the 5 minute? Yes, we do. Awesome. Let's go down to the 1. You can use points of relevance, or you can just wait for a shift. Okay, shift. Okay, shift again. Bullish gap. Again, notice what's happening here. See how the targets are like being hit instantaneous almost? So you'd have to reference off of these points, which is fine. But when you're using that smaller time frame, you don't really want to be going for targets to the left. You want to be going, well, they're always going to be to the left, but you don't really want to be going for like here or here. You want to be going for targets that are formed at the point of pulling back, which doesn't always happen. So just leave that there and see if it gets tagged in anyway. Oh, it does. That's actually disgusting. That is disgusting. I don't want to hear anything from anyone. That's filth. And again, like I said before, I'm not showing you this to be like, oh, you could have taken this trade. I'm showing you a principle of the same scenario that I've confirmed to you already, but it being in more of a compacted confirmation, if you were, rather than there being 3 time frames that confirm. We're looking at almost 6 time frames. Doesn't look like we get any more bearish moves. Okay, we do. Everything's still bullish. We know this. And we're back to where we were. So that's great. Okay, guys, I think give it another 5 minutes and we're probably going to wrap things up here. What's going on, Martin? Hope you're well. I'm great, thanks, mate. I'm really good. Hope you're good as well. Has been a while, you're right. A few things have changed since the last time I've been on. One being that I am a father for a second time now. I have a nearly 5 months old child, little boy. He's amazing. He sets the standard for babies when it comes to being good. Been sleeping the whole way through the night since 7 weeks. So that's great. Now partnered with a huge investment firm in the Middle East, in Kuwait City. Nesab Investment, you can see that there. I've been out to their headquarters. Flew me out there for like a week. What else has happened? Oh, apart from that, just been doing the same thing, really, my friend. Doing the same thing, plodding on, trading, enjoying life, teaching, refining the system. So you're happy to be at work? Oh, what? Because of the baby? Honestly, no. He's so good. He's so good. Like he is so good. It's crazy. It's crazy how good he is. He's just getting to that stage now where he's actually got two teeth coming through at the bottom. Got two teeth coming through. He's at that stage where he's just constantly like ah. It's like he's not crying. He's just like he's found his voice, you know. Um, I can't really work from home. So how are you? It's enough about me. How are you? How's things on your end? Hopefully well. Time flies so quickly, dude. I know. I know. Already seems like only yesterday he was tiny little baby. You know. Now he's rolling over and starting to like trying to sit up and all that kind of stuff. So with the second one, it's much easier, isn't it? Um, yes, yeah, I would say that it is. It is easier. I mean, he is such a golden child as well, though. That's sort of, he's teething and he doesn't even make a fuss. Like his teeth are breaking through, and he doesn't even make a fuss about it. Um, like he really is. Yeah, he's an angel. And when we tell people what he's like, everyone's like, "Really?" We're like, "Yeah." They're like, "Oh, that's crazy. Wish my child was like that." We're like, well. Big progress with trading. Oh, that's awesome, dude. Great. That's great. I remember last time we spoke, you were just practicing and practicing and practicing, which is great. What I've done since the last time we spoke is pretty much chopped up all of the systems that we developed. So SE, LSE, swing trades, um, what else? Gemini, buy side, sell side windows, everything that we developed across the years. I pretty much took all the defining factors of them applied them into a minimalistic system that now allows me to do like minimal chart work. Hard work pays off. Yeah, nice. Appreciate it, man. Same for you. I tried ICT. Oh, nice. I remember Gemini. Yeah, we still got it. Still got it, dude. We're in the midst of coding an automated bot at the moment. Automatic trading bot. The only thing I have a problem with ICT is he's like for the last however many years has claimed, you know, he's the best in the world and I'm gonna win the Robins Cup this year, and then every year he blows his account and then says he does it on purpose. To me, that just seems very, very suspicious. And I also think that a lot of the ICT concepts, again, this is just my personal opinion for anyone that's watching that disagrees, you know, everyone's entitled to their opinion. I also believe a lot of the ICT systems are overcomplicated to the point where he can showcase them and they work and you're like, wow, this is amazing. But if they don't work, he just says, oh, it's the algorithm, or you're doing it wrong, or this, or something like that. When in reality, you know, everything should be super simple. You know, the easiest way to trade is the simplest way to trade. That's why what I use now is as simple as it ever was, and you'll be able to know this as well, Martin, because you've been a member for a long time. When we create any kind of system or we find something that works in a good way, we make it as simple as we can, and that's the basis of it, is simplify everything, because there's no point in having a complex system with 20 million points have to be met. If you haven't already, Martin, have a look at the Keep It Simple series. That is the showcase of what I'm using now, which is the principle that a lot of people forget, which is there's only two things you should be doing in the market, and that's buying or selling. Everyone gets too concerned with finding the last week's highest price from the open gap of yesterday's price action of Sunday's open of Saturday's close, sort of thing. It's like, look at what price is doing now. What's it doing? Okay, can I trade it? No, it looks like shit. Okay, walk away then. Only look upstairs work for me. Yeah, that's it. Get some likes. Minimum 1,000. I think that's a really reasonable target to set, to be honest, Martin. I really do. I think 1,000 likes is so reasonable. I think anyone that disagrees is probably a bit crazy. Okay, so let's just go over what we're looking at here. We did form a gap here, and I explained how preferably our stop would be above the high. I missed you too, brother. Been a long time. Don't forget, if you don't have Discord, or if you do have Discord, join the Discord, dude. So we're still all in there, you know, doing our thing. From here, we want the stop loss to be above the structured high, and we want the entry to be off of the area of institutional in and institutional out. How often do you live stream? I've been live streaming every single day for the last 2 weeks. And on Sundays, every Sunday. Sundays aren't really an interactive stream. It's more of a case of, this is what I'm looking at for this week on gold and euro. And then that's it. But otherwise, every other day I've been streaming like a couple of hours a day. Then I've been going to the Discord and streaming with the VIPs, going over setups and stuff in there. today my partner has a nail appointment, so I need to go back home to look after the boy. He's leaving at 2:15, I believe, so won't be streaming for as long today. I mean, we're already at an hour and a half, so already been streaming for a little while. Okay, let's go. Yeah, man. It's been a long time coming. I've always said that we need to come back, but it was the time factor, and then obviously there was a lot of elements that drove us to stop live streaming. But at the same time, I do enjoy it. It's great fun, you know. Okay, so we said this before and we showed you this earlier. Our targets are low for this. We're looking for low targeting on this pair. Coming to the hourly, we called yesterday for price to run up into these highs. Price is indeed running up into those highs. Following the narrative and the basis that we gave out, if you look at these highs being swept, does this look like a longer term sustainable upside move? No, it looks like something that is going to come down again. Why? Well, we have targets at the low here. It's the same principle with Euro. We have targets at the low. The only difference is our targets are a bit washy. We don't really have a huge range on the targets. But we were looking at this high and we were looking at this high. Exactly the same as when we took out the previous points and we told you about the selling process that we were looking to do. Exactly the same. And then we sold here and took a loss. That was great. Love that. Then we have both of these hourly points that gave phenomenal entries, but it is what it is. It's one of those things. Down to GU here, it's the same principle. We're looking at price action selling down into those lows. Took out the lows here. Like I was saying before, you take out the lows and you run bullish. If your bias was bullish, you'd look to buy from this point. And price comes back, tags into it and runs bullish. Beautiful. But our bias is bearish, so we're not following that narrative. We're not looking at that. Exactly the same as gold. We want price to run bullish. We're looking at this low as our point of reaction. We know the narrative is bullish on the 1 hour. We want this gap to close. Like that. Price action runs up into this area. We want that gap to close. Closing this, so tapping into that, or just getting to here and even just pulling back, that tells us that there is no sell side gaps. We don't want the gaps there on the sell side. We want buy side pressure. That tells us that money is being picked up from the lows and it's being injected back in, form new highs, giving us targets and points of entry. Go back over to UJ. Remember what I said before, because we have such a long period between price pushing up and creating an area and price coming back, we would reevaluate the entry. So that means price reconfirming its order flow direction once it gets down into this level. I don't know why these are so dark. Oh, I do actually. 25%, that will do, right? So when we get back into here, we reconfirm with a new space. Order flow comes bullish again, then we can trade that back into the long, targeting the new target and overall the higher time frame targets that we set. Remember, like I said, if you want to be on the early birds list for the trading bot that we are developing currently, should be out at the end of December, then Discord is the place to find that. There is a Google document we'll be releasing later on today, and you can fill out your information and be in the first receiving members. Get that bot. Okay, what's the time? Right, it's 1:15, so probably give another 5 minutes and then we'll wrap things up. I said that about 25 minutes ago, so excuse me, we'll do one more. I'm gonna put an alert on this. See if we can get price action to tap into that. If we tap onto that, then we know that we've closed that gap. If we don't, so be it. We still have, I believe, like 45 minutes, so there's plenty of time for that gap to close. Remember, guys, as I stated before, if you haven't already watched the Keep It Simple series, episode 1 to 5, then I would highly recommend going and watching that. We've had a lot of people say that it's helped them out already, so there's no reason why it can't serve the same purpose for you. Okay, so let's go back over to NAS 100 here. Daily time frame is still bullish, very clearly bullish. We can see that. This is one of our targets. Go back to the hourly. Yeah, big expansive move. Then we've created a bearish gap, and now we've created another bullish gap. So from this point here, you can reference the 15-minute. You can reference the 15-minute. Okay, we're bullish. You can also come down reference 5-minute if you'd like to do that. At the moment, you're only seeing bearish. And then we're seeing bearish to bullish on the 1-minute. So that's what I was saying before. If you're going to apply like 6 time frames to it, it's going to often give you that clash. Whereas if you have 3, daily bullish, hourly bullish, 15-minute bullish, cool. All we're waiting for now is that money out scenario. Then the money in scenario to occur. It doesn't have to tap into this. That's just there for illustration purposes. If you're running off the hourly principle and you're only trying to run that, it would be something along the lines of this. U-Chef also performing really nicely here. We've got a nice bearish move down. So a really simple way to be able to apply this principle is if you just go to any pair and just highlight points on the 4-hour time frame that give you a high or a low. So like here, that's a high. Come down to the 15-minute. Have we seen a bearish reaction off of this high? It's also the Asia high. The only one we have seen is this, and oh no, it's there. And I believe as well that if we actually looked at that across a few different pairs, so if we go to, let's go to blanks and go this, GU, wouldn't surprise me if that gap's not even there. Yeah, so it's not even there. This is what I was saying earlier in terms of the data collection. If the data collection is correct across a collective, so that gap was still there, so on, then we'd follow it. Whereas it's more unlikely the data feed that supplies, whatever this is, Forex.com, is slightly off. So we're not just going to follow that. Keep that in mind. So there isn't actually a gap here. So there's been nothing. Back to the 4-hour. This is the next high. And again, this is something a lot of people look at and go, oh, you know, this is going to take forever. Ugh. That's what happens. Not just going to happen overnight. Well, it might happen overnight. It might happen over the space of a whole night. Okay. Right, guys. I think that is it for this live stream, unfortunately. If you have enjoyed this in any way, shape, or form, make sure you hit that like button. If you're not already a subscriber, then hit the subscribe button. If you're not already a member of the Discord community, then of course join that down below. Don't forget our partners, Nesab Investment. If you're looking to make hands-free investments, you can inquire about their services through myself, either via the Discord or via email. If you'd like my email, then please contact me via Discord. I hope everyone has an amazing rest of their day, and I will see you all in tomorrow's live stream. Peace and love. Ciao for now.